there, very good evening to all our viewers and welcome to Newsfirst Review 360. You're with me, Joel Outsgoon. Well, I believe that you had a great week and I'm here with you for half an hour to reveal to you the latest and trending and up-to-date business news here at home and around the globe. In a drive to boost exports and fast-track economic growth, Sri Lanka is gearing up to host the 2016 World Export Development Forum later this year. Let's take a look into this.
Minister of Development Strategy and International Trade Malik Samaravikrama said the government is working on a framework to boost exports and improve the overall business climate.
As a lower middle income country, we no longer have access to highly concessional foreign aid as we have had in the past. We have to be competitive and export or perish, as our President Javadana said about 40 years ago. Our goals in relation to growth, employment and incomes cannot be achieved without significantly improving our export performance. We are therefore putting in place the framework for faster export growth. This entails both measures to improve the overall investment climate as well as specific actions. On improving the overall climate, we are pressing hard with the following. Prioritizing fiscal consolidation, which will bring about external stability and subdued inflation, while also creating the enabling conditions for greater predictability and consistency in policies, particularly in relation to taxes, tariffs, as well as interest and exchange rates.
Sri Lanka's exports accounted for $17 billion last year, less than 20% of the GDP. Neighbouring Asian countries like Thailand, Malaysia and Vietnam export over 70% of their GDP. The government has set itself a target of increasing exports of goods and services to $30 billion by 2020. Minister Samaravikrama said an anti-export bias had hampered post-war export growth in Sri Lanka.
After the war ended, the country had a set of policies with a strong anti-export bias. The combination of an overvalued real effective exchange rate and a series of para-tariffs were the main elements of the anti-export bias in the policy framework. As a result, the economy has become as close as it was in 1970, according to a recent World Bank study. We are now in the process of reversing the legacy of a policy framework which disproportionately favored producing for our small domestic market as against selling to regional and global markets. We have clearly had a deeply misguided set of policies when one considers that Sri Lanka's domestic market amounts to only about 20 million people. Our government's priority now is to build a framework which accelerates growth for a decade or more and creates higher value employment through invigorating our export performance. It has been demonstrated again and again, particularly in Asia, that boosting exports is the means through which sustained growth and high employment generation can be achieved.
He was speaking at the launch of the World Export Development Forum 2016, which is to be held in Colombo in October this year. Around 1,000 participants are expected to attend the forum from around the world.
EDB, I am very confident that this year's World Export Development Forum will catalyze new business deals and generate new ideas for how companies can boost their competitiveness and use markets and international trade to drive inclusive growth. Sri Lanka is very strategically positioned between today's growth poles in East and South Asia and tomorrow's growth poles in Africa. And I can think of no better place for ITC to hold its flagship event than Sri Lanka.
The World Export Development Forum is the flagship event of the Geneva-based International Trade Center.
Now a look at the state of state-owned enterprises that continue to drain government revenue and burden the taxpayer.
It is estimated that loss-making state enterprises have cost the taxpayer a colossal 636 billion rupees between 2006 to 2015, while profitable ones have contributed 530 billion rupees. Advocata, a new think tank, hosted a panel discussion on the state of state-owned enterprises.
Let's take railways, which is a very, very difficult area. I was on an upcountry train recently where I think of the 6 carriages, there were 3 that belonged to that were operated by the CGR. The other 3 were operated by private entities, 2 private entities. And of the 3 that was being operated by the government, 1 was an observation car, which was not open to the general passenger. Right? So basically, everybody else was crowded into 2 carriages. If I were them, I would have put more carriages, but that's another story. They don't have the ability to invest in this. So there's a kind of a creeping privatization going on, even in this thing called the railway. The tickets for the first-class observation carriages, etc., are sold on the day that they come to market. And then you can buy it in a secondary market. Right? So we're not getting a clean privatization, but it's gradually happening. Right? So that is like one of the most difficult problems that you have. Now, of course, you have to understand that very little of this money goes back into maintaining the track. The train is crawling along at 25 kilometers. 25 kilometers speed limit in quite a long stretch. Right? And so on. So it's a very dysfunctional kind of solution.
Why do people actually resist? Daniel's question, resist these changes. And take the Sri Lankan Airlines example, right? I was asked finally after lots of discussion, so what do you do with this? And I said, close it. And everybody was stunned, right? And the reason, then I followed it up by saying that if this was a privately owned and private equity was in this, that's a conclusion that they would have certainly come to. Because airlines as an industry is anyway very difficult, apart from all the issues of wastage, inefficiency, corruption, mismanagement and all that. It's anyway difficult, so I said. Then after I said that, I said, now don't ask me, you tell me what the decision is. I moved it from a commercial decision to a political decision. So we don't live in a vacuum. We are not only making commercial decisions, we are making political decisions. And then I'm using that example. Then the question arises, I put it very bluntly and said, how much do you want to actually pay for flying the flag? You tell me the number and I will tell you how to model it to that number. I reversed it. Right? You tell me the number. There were 2 surveys done on the Sri Lankan Airlines issue. In one survey it said that basically the public was with the idea that privatizing it, looking for a partner, all that might be a good idea. And then there was another survey which said basically no way. It's a completely different survey which said a vast majority said no way should you privatize your airline. Now if you look at the people surveyed, it was clear. At one end it was probably more business professionals, education levels were high. Okay, email survey or whatever. And the other one was basically surveying probably random people on the street. So there is resistance, right? Because Rohan also mentioned a lot of reasons why about education, culture, this, that. But the fact of the matter is we are a democracy.
Now you all know the story on electricity, that on the generation side, private capital has been permitted. You also know that there's a lot of, it's a single buyer, single seller model. And you all know that there has been all sorts of rumors of corruption, at least, let's say. And I will say, there's no smoke without a fire on that, in that particular department.
While I was head of the bank, I came under pressure to basically remove directors and to put new directors on. And that was not a decision for the management, it was a decision for the board. And the board was under pressure. And it was a direct interference, basically by government. And it was resisted. But once I moved out, it just happened. Overnight, directors changed. gun was held to their head, and they were basically told, if you don't change, we will use our majorities at the EGM and make the changes. This is what actually happened. It happened in other banks also. It happened virtually in most private banks. Now that was not desirable at all. Then you have years of that, and then you have a change of government, and then often a new government then views those directors who came in through that particular door as probably people who should not be there.
There are iron triangles. You try to change anything in schools, you try to change anything in anything. Now, a Sri Lankan example, the politicians are given all kinds of sweet deals. When they travel, they are treated with respect. They are made comfortable, and therefore they don't mess with the Sri Lankan management. They turn a blind eye. There's a quid pro quo, and then the employees form the third part of the triangle. So it's a very solid object if you think of an iron triangle. Very difficult to displace it. It's only when there's a multiple billion hole in the budget that there's a possibility of breaking the iron triangle. So, crises. Wait for crises. Go for the crisis. That is the agenda.
Economists say China's economy is picking up. Stay tuned with PIS First Review 360. We will have details of this after this short commercial break. Welcome back. You're watching PIS First Review 360 with me, Joel Outschool. Well, GDP of several regions in China has shown an increase. Could this be a sign of recovery? Let's take a look into this.
A total of 15 provinces, municipalities and regions across China saw their GDP growth rate increase year-on-year in the first quarter of 2016, showing a promising sign of the Chinese economy. These 15 regions include Beijing, Shanghai, Jiangxi, Heilongjiang, Jiangxi, Guangdong, Tibet and Qinghai. But the GDP growth rates in another 3 provinces and regions including Anhui in East China, Sichuan and Chongqing in Southwest China and Xinjiang in Northwest China have remained flat with the same period last year. Economists say the Chinese economy is now bottoming and trying to pick up. The growth rates of all 10 provinces and municipalities in East China, except Beijing, Shanghai and Hebei, in the first quarter were up by over 7% year-on-year. The digit was larger than 8% in central China. In southwest China's Chongqing municipality, Tibet Autonomous Region and Guizhou province, the GDP even went up by more than 10% in the first quarter.
Well, Cuba is scrambling to build up more hotels and improve infrastructure as increasing arrivals from the US and Europe puts pressure on the leisure sector. PIS First Review 360 takes a look into this.
Okay, that was from in the 16th century, the tower.
American visitors to Cuba has nearly doubled this year as the island races to build hotels and expand Havana airport to keep up with the booming demand, a report from Reuters said. The influx has pushed capacity to the limit, prompting hotels to sharply hike prices and raising questions about how Cuba will absorb additional visitors when scheduled US commercial airline service starts later this year. Tourism has taken off since Cuba and the United States announced they would work to bury the Cold War hatchet in December 2014. The Caribbean island received a record 3.5 million visitors last year. The number of visitors so far in 2016 jumped 13.5% on the year to 1.5 million tourists. Of those, 94,000 were Americans, a 93% jump on the year, and more than 115,000 were Cuban Americans. Owing to increased arrivals, the Havana airport is set to be expanded.
Now a look at this week's cabinet decisions.
The Cabinet nod has been given to redraft the Inland Revenue Act to international standards. Cabinet spokesperson Gayantha Karunatilaka said that the Inland Revenue Act, which has been subjected to repeated amendments, needs clarity and simplicity.
දේශීය ආදායම් පනත සරල කිරීම සහ නව්‍යකරණය කිරීම.
The Inland Revenue Act number 10 of 2006 has become complicated owing to the repeated amendments over the years. As suggested by Minister Ravi Karunanayake during the 2016 budget, there was a request to redraft the Act in keeping with international standards and transparency. Cabinet approval has been granted for this request.
දේශීය ආදායම් පනත යලි කෙටුම්පත් කිරීම සඳහා මුදල් අමාත්‍ය රවි කරුණානායක මැතිතුමා ඉදිරිපත් කළ යෝජනාවත් අමාත්‍ය මණ්ඩලය විසින් අනුමත කළා.
Views from an energy forum hosted by the American Chamber of Commerce coming up after this short commercial break. Welcome back. You're watching Best First Review 360. Well, now the world is moving away from coal power and embracing environmentally friendly renewable energy. What options are available for Sri Lanka? Let's take a look.
We are getting to a point where there is going to be a tremendous dependence on a single source of energy for electricity, which is going to be coal. In an era when every other country is moving away from coal, including the US, including India, including China, where we've seen significant drops in coal use in the oil sector, coal companies going out of business, coal plants being retired. For us, Sri Lankan to get into coal dependency is like any investor deciding we're going to put all our money into a single stock or even a single sectoral stock. I think from a risk point of view, that is very, very dangerous. So my sense is that the energy sector policy has to address not only the sources of energy for both, particularly transport and power, but also the demand side. The industries, the consumers have a lot to play, and we see this happening in the US and other countries where demand-side management and active control of demand.
At the present policy is we go for lowest cost for the people. So at the moment, it's a coal coming as the lowest cost. Maybe some are complaining that is not including the environmental cost, social cost. So it's debated. How do you estimate the total environmental cost and all these things? But CB generation plan at the moment, they have a lot of coal power plant, Sampur, Indian plant, Japanese, all these things. But now things changing, a lot of pressure coming to from the people, and as correctly mentioned, all the countries are going away from the coal. Why you are going to coal? Another one argument. Other argument is, of course, all the countries are going away from coal, but Sri Lanka also can have 1 or 2 coal plants. Why not? At the moment, we have 3 coal power plant coming, and Sampur, Indian plant, and 2 more coal power plant proposed in Japan. Japanese are trying to invest in this and not finalized. But then our government thinking whether we shift those some of the 2 coal plants for Japanese investment, whether we should shift to the LNG. Everybody is shifting. That being discussed. Most likely we might do it, but still NTPC Indian plan will stay possibly. But our direction is to move on more on LNG and more cleaner fuel. That's the direction.
The problem that we've seen in the CEB's current generation plan is that there is, at one level, there is externalizing of the costs in the planning process. So, for example, if you take Sampur, the cost of constructing a jetty, cost of constructing power line, those things are externalized in the generation planning itself. So this artificially shows that coal power is cheaper than other generation options. That's number one. Number 2 problem is we need to look at where is this cost of 0.1 euro cents per kilowatt hour coming from. So it actually comes from a study that was done in 2000 by World Bank. So it's 16 years old, but the actual data that is used in the 2000 study is GDP values of countries like India and China in 1993. So that's why this 0.1 cent is there. It's artificially low.
There is no uncertainty about the availability of natural gas. Bringing it into Sri Lanka is a slightly more technical matter, not just from the point of view of production, but also from the point of view of consumption, which is in many other countries a no-brainer. But we have no infrastructure, we have no market, we have no regulator. And the best thing we can do to prepare for the inevitable day that we do induct natural gas into our domestic economy is to maximize the demand. So if we maximize the demand for natural gas, remember we said that right now any of us can't use any of it. If we can actually maximize the demand for natural gas, then the cost per unit is going to drop when we actually can deliver it to the nation, which means we can then deliver it to the nation at a competitive price, which ultimately will serve the goal of bringing the energy price, the energy cost of Sri Lanka down. I mean, that's the ultimate goal of all of this. And our policy, our input to the policy that Dr. Bhattacharya is compiling is an attempt to bridge those two things, supply and demand, for natural gas.
Energy, in terms of how we plan energy as a national level, because what we've seen is that if you want higher degree of renewable integration into your grid, you should not put more coal power. It's very clear, because coal power is very rigid. They cannot do ramping up and down based on the demand. Now, if you look at what's going on in US, what's currently going on in US is that to make more and more renewables, to bring in more and more renewables, they are actually dismantling their coal infrastructure and replacing that with natural gas. So, from a long-term strategy point of view as well as from an economic point of view, it absolutely does not make sense for us to even think about adding more coal power.
Now for some other stories that made it to the headlines in brief.
136,367 tourists visited Sri Lanka in April 2016 in comparison to the same period last year that recorded 122,217 tourists. However, 56,474 less tourists have arrived in the country since March 2016. Travellers from India surpassed number of Chinese visiting Sri Lanka, with arrivals from South Asia surging 13.4% to 37,312 compared to the same period last year. Meanwhile, tourists arriving from Western Europe, including traditional markets of UK and Germany, is 12.2% to 39,243 in April 2016. Yet, statistics show a drop of 30,729 visitors from the region when compared with March 2016. More Ukrainians have visited Sri Lanka in comparison to April 2015, and visitors from Japan rose to 3,172 in April from 2,519 tourists recorded in March. A drop in tourists arriving from Australia, Russia and UAE was also observed during this period.
Well, with that, it's time for us to wrap up this edition of Newsfirst Review 360. And hope if you stopped by at our program that you got a glimpse and caught abreast of the latest and trending business news here at home and around the globe. But if you missed out, don't worry, because you could search us on social media platforms by just typing Newsfirst Review 360 and keep yourself up to date of the latest and up-to-date business news. On that note, we wrap up this edition. Thank you very much for stopping by. For the Newsfirst team, I'm Joel Outsgoon. Remember to have a great and safe weekend ahead.